Hey everybody, hope everyone's doing well and had a good day. This video is a recap of the Emini 5-minute chart for Tuesday, March 25th, 2025. I want to talk about the daily chart context really quickly. We can see we had this big sell-off by the bears. It's a tight bear channel. And the first reversal attempt will probably be minor. Then we got this rally. And this is March 17th. You can call it a 3-bar micro channel. It's a bull breakout. And this is basically a weak low one short. 3-bar micro channel. It's a trend line break. The bulls will probably get a second leg. And the odds are there were buyers below this bad sell signal. So we trigger the sell signal. The bulls get a brief second leg. Is that enough of a second leg? Probably not. Probably will get a more symmetrical second leg, maybe a test of the moving average. In this case, the low 2 triggered. We got a high 2, bull breakout, pull back, high 1, pull back, high 2, and then a second leg up for the bulls. So 2 or 3 legs up. And if we look at the sell-off, it depends on where you draw it, but you can see we're approaching the 50% pullback, the midpoint of the sell-off, so probably resistance not too far above. We may have to test this breakout point. You can see the market is getting close to that breakout point. But what happened today, or going into the day, bulls are getting a second leg, so it's a late leg. And the reason I say late leg for leg 2 is because this leg is counter to the direction of the trend, right? We have a bear trend. Leg 1, double bottom, bull flag, second leg up. Leg counting is really important when the market is in a trading range. And when there's a bear flag, or what might be a bear flag, it's a type of trading range. We call it a pullback because the directional probability is still down until it grows to about 20 bars. But here, the bulls really need follow-through, and even if they get it, what type of follow-through do they need? Is a doji bar good follow-through? No, not really. We still have 2 legs up testing resistance, and it's 2 legs against a strong bear breakout. So even if the bulls get follow-through in this area, will it be enough to break out of this resistance? Or will we find sellers above and the bears get their second leg down to test the lows? All that to say, testing resistance on the daily chart, context not ideal for the bulls. It's a late leg against a tight bear channel. So today, I have yesterday's high drawn in blue, the horizontal blue line. And today we opened just above yesterday's high, tried to break out above and failed, reversed, back down. And look at bars 1 through 4. Not a micro channel. We broke out above bar 2. That's a pullback. And look at the attempts down. Bar 2, sold off, rallied, sell off on 3, rally on 3, sell off on 4, rally on 5. So that's 3 attempts down. Does this look like a strong bear breakout, or does it look like a leg in a trading range? All the bars are also above the moving average. We're testing support here. The approach to the moving average, fairly weak, looks like a channel on a lower time frame. What do channels evolve into? Bear channels, bull channels, they evolve into trading ranges. So we expect the bull breakout and a test of the highs. Might be a tight enough channel down to bar 4 or 5 that the first reversal up will be minor. The bears may get a second leg, but their second leg was bars 6 and 7. So a brief second leg testing a new low, but it's breakout mode. You can call it an expanding triangle. We're testing down and up, down, and up again. The market is probing up and down, looking for a fair price. And when it's going up and down, alternating back and forth, every bar or every other bar, the market is in a trading range. But then we got a 3-bar micro channel, and it's the first micro channel of the day with 3 consecutive closes in the same direction. That's bar 10. Strong enough rally and double bottom in a bullish regime, right? Here's the context. At the end of yesterday, looks like a bull trend, bars above the moving average, higher lows, higher highs, and then we get the breakout to bar 10. The odds are the first reversal down will be minor, so traders will look to buy it. And in this case, traders bought the close 10, and we got follow through on 11 and 12. Strong enough bull breakout for a second leg. We paused on 13, 14, and 15. Is that the second leg for the bulls? It might be, but it's not symmetrical in size, and we still have not had a pullback. This entire rally is a micro channel up to bar 16. 17 finally broke below 16. And here we started to go sideways. Tight trading range, possible final flag, but still the directional probability favors the bulls. One problem is the context on the higher time frame. I mentioned the daily chart. But also here, we had 3 legs down to the moving average, 18, 23, and maybe 25. But what happened here? Did traders buy at the moving average? They bought 23, but 25 broke below, pulled back, and broke below again. So we broke this tight bull channel trend line by going sideways, and now we're breaking below the moving average. This could be an endless pullback. Three legs down, I said 18, 23, maybe 25 or 26, but tight enough bear channel that second leg down is likely. The first reversal attempt will probably be minor, and then we got 28, 29. To me, 28, 29, it's not clear that 28 resets the leg count, but once we get 29, to me, the leg count resets here. Breaking far below many bars to the left. Bull trend, but not all that strong. There's selling pressure, tails above bars, opposite bars, and then this endless pullback. And you can call it a wedge bull flag, but we broke to the downside. And that's a lower probability event. In general, you get maybe 25-30% of the time you break below a wedge bull flag. In this case, we got the lower probability event. When we get that, it's considered a surprise. The low probability event happens, traders are trapped. Those who bought here, and let's put a line here, 27, good buy signal bar, 3 legs down, possible wedge bull flag, reasonable to buy above 27. If you did, you got trapped. And then leg count reset when 28 and 29 trapped traders. So at least one more leg down, likely. Is that bar 34? It might be. Pull back, low 1, pull back, low 2. At this point, after pullback, we've entered the channel phase. What happens in a bear channel? Traders begin to buy at new lows. Bears look to take profits, and bulls buy for scalps. So 34 tests below 30, and we bounce. 35 still a minor reversal. And 36, 37, we got a bear breakout 37, but what's the leg count? 1, 2, 3 legs down, testing support. or the bottom of the day's range might be a horizontal trading range day. 3 legs down and trap traders above. Gaps usually close in trading ranges, and traders who get trapped are usually forgiven. If they're patient, they use a wide stop, they scale in, they can usually avoid a loss and make money. So after 3 legs down, we expect 10 bars and 2 legs, sideways to up. And then we got the rally. So inside bar, 38, not especially strong, but it's an inside bar, breakout mode, 39, bull breakout, maybe minimum follow through, 40. Enough breakout buying pressure, 38 to 40 for a second leg up. In this case, depending on how you define certain things, maybe 41 is an immediate second leg up, right? Bull breakout to 40, leg 1, no pullback immediately. We continue to rally. Leg 2, pause, and then a third leg up to 44, and look where we're testing. The stop order price above 27, where traders were trapped. If you're a bull, you did something reasonable, buying above 27, you got trapped. But if you use a wide stop, scale in at support, usually avoid a loss. But what are you going to do if the market retests the 27 high, the original entry? You're probably going to be disappointed with what happened and look to exit at break even at the original entry. So 45, if you're long for any reason, you probably exit below 45. The bears, they get breakout follow through. You can call it reversal follow through. Strong enough selling, second leg down, likely. Also in the direction of the bigger trend here. Tight bear channel, trend line break, but probably still need a test of the lows. Let me just draw that in. So here's a bear trend line break, strong enough rally, second leg up likely, but we'll probably retest the lows first. And I said, bulls who bought 27 got trapped. Well, the bears who sold, pick a bar, 37, 38, anybody selling down here got trapped by the rally. So what are those traders going to do on a retest of the lows? They'll probably look to buy back shorts. Bulls who missed the rally, who did not buy here, also looking to buy a deep pullback, hoping to capture a second leg up. So this area becomes support. Strong looking breakout, 45 through 48. But how much is it actually breaking out of the trading range to the left? Really only 48, closing just below 37 low, and could not get a bar closing below for follow through. So bear breakout, but no follow through. Second attempt subdivided into 2 legs. And over here, it's subdivided into 2 legs. 1, pullback. 2, it's also 3 legs down, 37, 48, and 56. And again, we're testing near the bottom of a trading range, trying to break out below the low of the day on 56. We poke below, reverse back up, bull, reversal bar, closing on its high. After 3 legs down, might have to get 10 bars and 2 legs sideways to up before traders look to sell again. And what's the problem here? 45 through 48 is still a strong enough sell-off that there's probably trap traders above looking to sell. Was this enough of a second leg? It's the bare minimum, but the bears may get a more symmetrical second leg than 51 through 56. This may simply be a complex pullback, a low 2, low 1, deep pullback, low 2. I don't reset the leg count Let me back up. To me, 59 is not a low 1 because the market did not break out strongly to a new low. We tested the lows but reversed back up. So to me, this is all part of the same pullback. It's also a higher high, double top, 51, 59. Every double top is a variation of a low 2. You can also call it an expanding triangle, 48, 51, 56, and 59. That's 4 legs. 1, 2, 3, 4. You may get a 5th leg. Expanding triangles, you get 5, 7, sometimes 9 legs. The problem here for the bulls, if you're buying, is the stop is below 56. But it's it's a possible expanding triangle. If you're buying here, you may get a deep pullback, and if you do get a deep pullback, it makes more sense to buy below 56 than to have a stop loss below 56. Are you really eager to sell below 56 after seeing what the price action is doing? No, probably not. Makes more sense to buy down here. 60, strong enough bear breakout, second leg down likely, trapped traders above. Look at bar 60 compared to 59, and notice the amount of overlap. By that I mean the lack of overlap. If you were a bull buying below bar 59, you got trapped on bar 60. You're holding a losing position on the close of bar 60, and you took a risk. You're doing something a little more risky by buying here. Might be, like I said, might be a low 2 or an expanding triangle. The bears still might get a second leg down, more symmetrical, to 45 through 48. 60 is a warning for the bulls if you bought. If you bought, you probably don't want to see bar 60 because it's trapping traders. Now there's probably resistance above, probably sellers at the low of bar 59, the breakout point. One more thing I'll add with that. What happened on bar 59? Well, what happened here? It's a bull breakout. Technically, there's no technical pullbacks. There are pauses. We can count 3 legs up, 1, pause, 2, pause, 3, and then immediately a strong bear breakout. Big up, big down, big confusion, trapped traders above. If you're a bull and you bought the close of 44, you're trapped into a losing position. And at this point, you're probably just hoping you can exit the entire trade at break even. If you scale in, you're probably not trying to get back to the close of 44. If that's the case, maybe you buy the close of 44, look to buy more lower, maybe a reasonable second entry long above 56. If you do that, you buy the close 44, buy more above 56. Where's your average price? The midpoint of the 2 entries. And where did the market test? The midpoint of those 2 entries. So 59 is also a warning that the bulls who bought here, scaled in, they might be just getting the heck out of their trade at break even. It's that selling pressure that contributes to second legs down, trapped traders above. Bulls not looking to buy for several bars, maybe a couple of legs. You have aggressive bears also selling here, looking for a second leg down. And the bears did get their second leg down. At this point, 65. 3 legs down, 48, 56, 65. You can also say the final leg, leg 3, subdivided into 3 legs of its own. We sold off, 61, pulled back, actually 62, pulled back above 61. When we sold off, rallied, sold off to 63, rallied 63, 64, sold off a third time. So it's a nested wedge. 3 legs down here, 3 legs down here, overall trading range day. It's really important to count legs, especially in a trading range environment, because the market often reverses after 2 or 3 legs in the same direction, especially when they're occurring at support or resistance. So here, nested 3 legs down to support. Bull bar closing above its midpoint. If you're short for any reason, reasonable to exit above 65. Always in bulls, might look to go long. Bull breakout 67, follow through 68. Good context as well, probably will get a second leg up. Because the context is so good here, you often get more shallow pullbacks. Now we don't have a micro gap at this point, and breakouts that do not have micro gaps typically pull back deeper than breakouts that do have micro gaps. But again, context is good here. If we do pull back, it may be brief and it may be shallow, but I suspect we'll test higher, probably test maybe the close of 58. Maybe we'll get back to the low of 44. And you can see we're oscillating around the high of yesterday. Tried to break out above, failed. Break out below, failed. Break out above, we failed. Break out below, failed. Back and forth. Bear was trying to get a breakout below, but now we have 3 legs, lots of overlap, probably at least test the top of this trading range. Or at this point, you can call it a bear channel. 69, fairly deep pullback, but just 1 bar before the bulls have a second attempt. 72, another attempt down for the bears. Bears hoping this is enough down to trap traders above. They want a second leg down. But the bulls see the bottom formation, strong enough rally for a second leg, and then there's a high 2 on a very small time frame. There's an implied high 2 on the close of 72. Some traders might see 72 as the high 2 bull flag after 67, 68, looking for a test of higher prices. So they might buy the close 72. And that's what we got here. You can see the reaction at the resistance I had drawn. The close of 58, we find profit taking, but it's minor. Test higher, the high of yesterday, the low of 44, find profit taking, start to go sideways. So I hope that was helpful. That's going to be it for this recap. Thanks everybody for watching, and I hope everyone has a good night.